Hi there, welcome to kneppyinvests. In this video, I'm going to be discussing the week EML Payments had during May 17 to 21st. The week did not start out well for the company. They went into a trading halt just before open on the Monday in regards to regulatory concerns that the CBI, Central Bank of Ireland, had raised in regards to one of EML's subsidiaries or divisions they had bought only a year ago. And I remember this acquisition because the company was congratulated by a lot of people because of how cheap it seemed to be. Sometimes when a company buys something on the cheap, there might be reasons behind why it's actually the value of the company is quite low. And Slater and Gordon can tell you all about that because when they made an acquisition on the cheap, it completely decimated the company and its shareholders. When EML Payments came out of this trading halt on the Wednesday and released what these regulatory concerns were all about, the market did not like what they read and the share price fell 44% on the day. In fact, on open, or just after open, about a minute after open, the share price was down as much as, I think it was 60 or 65%. Was this the market overreacting, or was this the time to get out of EML Payments? So I'll be discussing these questions in this video. Also I'll talk about my opinions and what I have been doing with EML Payments in regards to my holding in Neppy's portfolio, because I do have a position in that portfolio. Have I sold out yet, or am I going to sell out? And then also talk about not a similar case, but when it comes to regulatory concerns, there are some investors out there who refuse to buy into any company whose business could be affected by government regulatory changes. So that includes EML Payments. That will include buy now, pay later. That would include companies like McMillan Shakespeare, which I'll talk about towards the end of the video, because in 2013, their share price fell from $18 to $8 in a few days, because the government at the time were talking about changing the fringe tax benefits law or something like that. The market got wind of that, and that's why the share price fell. Those changes never came to fruition, and that was a case of the market overreacting. EML Payments could be identical to that. But the market hates uncertainty, and there's a lot of investors who don't like to take on added risk. And they see this as more risk in EML Payments. They're risk averse, and that's why we did see the share price fall. But this does lead to possible opportunities to buy into a growing company at much better value. So before we talk about all that, let's just go back in time to May 17 and look at the trading halt the company went into on that day. EML Payments went into a trading halt just before open on the Monday, the May the 17th. Whenever you see the trading halt announcement, just the title trading halt, it could be many things, positive or negative. So I never tried to hypothesize what it could be about. I just open it up. But as soon as I open it up and I saw significant regulatory concerns, I immediately went, uh-oh, this is not going to be good at all. And I knew more than likely the share price was going to take a massive hit, particularly because it said regulatory concerns. The market hates the fact that companies can be affected by government regulations, particularly if regulations change by governments coming into power, that sort of thing. But the fact that it just said regulatory concerns notified by the Central Bank of Ireland was a massive red flag in this case. The other red flag was that it concerned Prepaid Financial Services business that EML acquired only 1 year ago. So that does raise questions about whether EML did their due diligence before they acquired this business. And it just reminds me of Slater and Gordon when they made that acquisition, I think it was Quinnell, about 5 years ago, and whether they did the due diligence, because that acquisition absolutely destroyed Slater and Gordon. Of course, once a company goes into a trading halt, there's nothing you can do but wait. There's no reason to get stressed about the trading halt because you can't sell, you can't buy, you can't do anything like that. In fact, in a way, a trading halt is a great lesson in patience. And really, trading halts only last a few days, so there's no reason to become concerned. Although sometimes trading halts do turn into suspensions, and suspensions can last a few years. And then instead of being great lessons in patience, they become awful lessons in frustration. And that really hasn't happened to me, and I hope it never does. I would hate to hold a company for a few years without being able to trade it. Anyway, the CBI concerns were in relation to PCSIL'S anti-money laundering and counter-terrorism financing. As soon as I read that, I thought this actually was worse than I could have imagined. Those two things, anti-money laundering and counter-terrorism financing, are not something you want to hear that one of your businesses is doing, and that does raise concerns about how much of due diligence EML Payments did before they purchased this company. EML estimates that approximately 27% of their revenue is derived through these programs. So you could maybe rationalize the share price should fall by at least 27%. But this announcement does increase the risk of EML Payments by a significant amount. And the market hates uncertainty and risk. And this announcement actually does increase the uncertainty. There's a lot of things we just don't know about CBI's concerns. Is it really big concerns, or is it just really small issues? We just don't know, even though they did mention the word significant in the trading halt. We just don't know how significant it is. In fact, there's also a scenario we could have a hotshot in CBI who just recently got promoted. He wants to leave his mark, so he found one company that had small issues, and he's just going after this one company. That's also a possibility. There's also the possibility, because we're going to see PCSIL'S response to these concerns by May the 27th. And once they do respond, and if they respond quite positively to these concerns, maybe this is it. And if this is it, the share price of EML Payments right now is really good value. So there's also that possibility. But it all comes back to risk. This just increases the risk, and the market does not like risk. It does not like uncertainty. And that's the whole reason the share price has taken a hit over the last few days. But we did see actually the share price rise 15% on the Friday, which is interesting. But that also could be just the short-term traders just playing with EML Payments. Another thing they did in this announcement was not change their financial year 21 guidance. And that shows you that even the company is unaware how this is going to affect their business. And they actually mentioned that. They said could materially impact the European operations. So the two most important words there are could and materially. Could means, or could also mean, it may not. And materially, well, what is materially? It could be massive, or it could be not massive at all. There's no financial numbers here of how it's going to impact the business, because EML Payments don't even know how it's going to impact the business. And this comes back to the market uncertainty. The market does not like uncertainty, and we don't know how much their financial year 21 guidance, when they got more clarity in regards to this news, it could take a massive hit. Maybe EBITDA will drop from between 50 and 54 million to 20 to 24 million. We just don't know. Everything here right now is all about guesswork. You're just guessing what sort of impact this is going to have on EML Payments. And that's one reason, a really logical and rational reason to sell out of EML Payments right now, just because you just don't know. This is the market reaction to EML's payments news. And this is a 3-day chart with 5-minute candlesticks. So sort of a 3-day, 5-minute chart. I do like to look at these sort of shorter time frames when it comes to these announcements, because you will see a lot of day traders coming in and trading the swings in the share price. So we do see some good swings in EML Payments share price. A lot of times when you get these announcements, those really risk-averse holders will sell out on open. They won't even question, sell out on open. And a lot of times you will see the low of the share price right on open or just after open. And we saw that with EML Payments. The share price opened at around $2.60, and the low of the day was about a minute after open at $2.47. And then we saw a really nice bounce in the next hour. In fact, the share price went from the low of $2.47 to about $3.45. So a nice profit for those day traders. And then we saw during the rest of Wednesday, the share price just drift back. And as I watched it drifting back, I decided to take a position in EML Payments, my trading position. I do have EML Payments in my Neppy's portfolio, which I will be looking to sell eventually in the next maybe few weeks if the share price does rally a bit. But I decided to take a trading parcel at $2.80 at the close. I thought that was there would be a good potential bounce from that price. And we saw it on the open the next day. In fact, the share price went from $2.80 to $3.20 in about an hour. And I decided to sell out after holding that trading parcel for about an hour or so. Share price then just drifted back through the day, just like it did on the Wednesday, drifted all the way back to $3. I was thinking of buying another parcel at close on the Thursday at $3. I decided because I was in between night shifts on the Friday and more than likely sleeping through the trading period, I decided not to have that trading parcel. I didn't want to have a trading holding in EML Payments as I was sleeping because I wasn't sure what the share price would do during the day, and it ended up the share price was up 16%. So that's okay. I don't mind the reasoning behind not having a trading parcel in EML Payments was sound, and it was just the fact the share price went up 16%, which was actually good news for the Neppy's portfolio holding. Share price currently is $3.37. Wouldn't be surprised over the next few days, next week or so, we might see those traders who have held EML Payments for the last few days take profits, particularly because share price is up about 20% since the close of trading on the Wednesday. So that's potential. The market, a lot of participants in the market could get excited, particularly if they see good value with EML Payments, particularly if they think these concerns won't have a material impact on the company. As I mentioned, I do have EML Payments in Neppy's portfolio. I did buy it because there was some good positive momentum and sentiment. They did release a positive half-yearly result in February. Those two reasons I bought in have now turned against EML Payments, so sentiment has shifted. It's a little bit more negative, particularly when you look at the share price action, and we'll look at the chart in the next few slides. So that's one reason to sell. The other reason is they did release a negative announcement. So even though there's a lot of uncertainty within this announcement, we just don't know how bad it's going to be, that is negative. So any sort of uncertainty within an announcement is automatically negative. So I do get two hits or two sell signals when it comes to EML Payments, and that's the reason why I am looking to sell out of the company in the next few days or maybe the next week, particularly if we do see this bounce continue over the next few trading days. These are my thoughts and actions on this announcement from EML Payments. I do believe, the market initially overreacted, and we always see that on these sort of announcements with the opening around $2.60 and the low just after open at $2.47. That does lead to some opportunities to trade a company, but the market does not like risk, it does not like uncertainty. So a lot of people who sold out at the open just didn't want that risk, didn't want that uncertainty. They just did not know where this was going to lead to. But if you are in that camp, the only suggestion I do make is don't sell out on the open. Just wait a few days to sell out, maybe even a few hours to sell out. You can always get or sell out at a higher price. And that's what I'm doing right now. I'm just being a little bit patient, trying to sell out at a higher price. They might argue or counter-argue that you just don't know when the next bad announcement is going to be released by the market. It could be later that day. It could be in a few days. I actually have seen that before. When a company releases a bad announcement, the follow-up bad announcement could be less than a day away. So there's always that possibility. But again, in saying that, potential regulation changes, concerns are always an issue. But a lot of times the market does overreact to that. And I'm going to show you an example of McMillan Shakespeare in July 2013, how completely the market overreacts to potential regulatory changes. The market hates potential regulatory changes that could affect a business. Although in saying everything there, it did trigger my sell signals, so I'm remaining patient and will sell or offload my holdings in the next few days unless there's further information. So maybe that May 27 reply from PCSIL'S will be positive, but I'm not sure we'll see that by the time I sell. So unless there's further information received by me, I will eventually offload EML Payments in Neppy's portfolio. I've mentioned McMillan Shakespeare a couple of times in this video, and I don't know why this has been just embedded into my brain, into my memory, because I was not a shareholder of this company. I wasn't even paying attention to this news when it happened, but for some reason I just remember and come back to this example about possible regulatory changes and how it can affect a business. So McMillan Shakespeare was a darling on the ASX before July 2013, I think. In fact, the share price went from $2 to a high of $18, and that high of $18 was just before the share price fell by 62%. The whole reason the share price fell by 62% was because the government of the time was thinking of changing some regulations in regards to fringe tax benefits. And these changes were going to affect companies like McMillan Shakespeare. And the market hated it. The share price fell 62%. And the day they released these concerns, the share price went to a low of about $7 or so, and then rebounded during the day. In fact, it rebounded from $7 to $9 in that day, and the share price kept on rallying from then on. And the funny thing is, the share price of $7, $8 has only been reached once since then, and that was during the COVID-19 cough when it fell to below $6. I think it fell to about $6. So ever since this announcement in July 2013, the share price has only fallen below that level once, and that was because of a financial panic. And in fact, if you bought on this day, they released this announcement, you could have sold back at $18 in 2017 and 18. Although in saying that, $18 is still the all-time high for McMillan Shakespeare. Current share price is $11.53. So right now, McMillan Shakespeare is not really the buy and hold company. Even though before 2013, when the share price went from $2.18, it was. Right now, it is not. That is all I've got on this video of EML Payments Week between May 17 and 21. If you do think this was a market overreacting, or if you think this was a definite sell signal and you should not be holding EML Payments moving forward, I'd love to hear your comments. I do think we're going to have differing opinions. I went to Hot Copper to see what all those people were thinking, and it was sort of split 50-50 between those who were thinking this is just like a Wirecard example, which is complete stupidity. This is nothing like Wirecard. And there's those who believe this is great value. So I think that shows you there's a lot of uncertainty in the market right now. So I'd love to hear your comments on EML Payments and this announcement they've just given us. Otherwise, if you have any other sort of comment or question about any other company, leave it in the comment section. I'll try to answer every question I received ASAP. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's all for this video. I hope you enjoyed it. Have a good day. Bye.